All right, folks, my next guest says, don't overcomplicate things. Stay bullish. Joining me now, Niles Investment Management Partner, Portfolio Manager Dan Niles. And Dan, we instinctively, right? We're human beings, though. When things feel too good to be true or they're going our way, we naturally start to look for an off-ramp, don't we?
Well, I mean, it's not going to surprise me to see the market pull back a little bit at some point in here, because obviously it's been straight up since the election. But yeah, that's human nature. But I think you've got a lot of bullish things pointing for the next year, really, especially with President Trump having been elected and his pro-growth deregulation policies that he has in place.
Yeah, we're going to put up a list of some of the bullish factors that you cite, sharing with the audience. Also, I'll read them out for our radio audience. Trump's track record in the past, the Federal Reserve, fiscal policy, no recession, artificial intelligence, China stimulus, seasonality. It's hard to push back against that. I mean, to your point, where do traditional valuation metrics like, the PE ratio is too high, those sort of things come into play?
Yeah, no, I mean, those are still here, Charles. I think the thing is, though, estimates probably for company earnings are going to start getting revised higher, especially if you work in things like tax cuts. PEs are definitely high, but they can always go higher. You and I both lived through 1999 through 2000. And even if you go back and you look at more recently what happened during 2021, you had the meme stock craze and everything else that happened during that period of time. When you're in this period of, you've got a president who's pro-growth, you've got a Fed that's cutting aggressively, and then you've got fiscal policies that are expansionary in nature, like the tax cuts that are coming, unleashing areas like energy. And then you're entering a seasonally bullish part of the year, which is November, December, January. It's really tough to fight that. And if you end up with any kind of pullback, which you got to believe it happens at some point in here, given how straight up it's been, you kind of want to jump on that, I think, and look at some of the even riskier areas of the market, like the smaller cap names, the Russell 2000 type sectors, which is, by the way, you go back to 2016, did very, very well, where the Russell 2000 was up about 14% from the election through year end in 2016, while the S&P gained 5%. And if you look at this past week, you saw a similar pattern where the S&P was up 5%, but the Russell 2000 was up by actually 9%. So it's hard not to be bullish right now.
Yeah, and to your point, and talking about buying pullbacks, there's some names that, that were down for me like maybe a week or two ago, and I look on the screen like, whoa, okay, I mean, they come back pretty quickly these days, but I do find it interesting. You still prefer equal weight right now.
Yeah, because I think, if you think about the last couple of years, what have you spent a lot of time talking about to your viewers? It's the Magnificent Seven. But if you go back to 2016 as a good example of this, coming into the election in 2016, the Mag 7 was up about 10% or so coming into that. And then on the other side of that, actually the Information Technology Index, was up about 10% coming into that. And then from the election through year end, it was only up about 2%. And as I said earlier, the S&P was up 5 and the Russell 2000 was up about 14. And this time around, the nice thing is President Trump is looking at the biggest U.S. tech companies and saying, hey, I want to be supportive of them. I don't want to break them up. If we don't have great companies, China's more than happy to take over and have great companies. And so they may do a little bit better. But I think a lot of the more forgotten sectors sitting in the small cap index, for example, or financials, industrials, energy, which did also very well in 2016 from the election through year end, those are areas that have sort of been forgotten that I think we'll see some more interest going through year end. That's why I'm saying the equal weighted S&P, if you want more stable companies, is a good place to look. But if you want a little bit more risk, which I think you can take, the Russell 2000 is also an area where you can go fishing.
Hey, let me ask you about your thoughts on the efficiency, going after the bureaucratic marble, right? Trump and Elon Musk with a target of $2 trillion. Yeah, we know one thing. Corporate America likes fiscal spending. They love stimulus because ultimately it goes to their bottom line. Would that change your calculus if they started to really carve up and carve out big chunks of government, which, listen, a lot of taxpayers probably would be relieved, but the corporate side, maybe not so much.
Well, here's the thing. You've got a case of the unstoppable force in Elon Musk meeting the immovable object, which is government overspending. So we're going to have to see how that works out. I'm hoping that we can carve it out and make it more efficient. But as you know, Charles, a lot about the government, it's not about efficiency. It's about how do I create jobs in my district so I can get reelected. And so that's the exact opposite of efficiency.
Right.
So we're going to have to see how that works out, because to your point, what scares me is that if we don't get that efficiency, the deficit's going to go up. We've already seen the bond market where yields have gone up about 80 basis points from right before the first Fed rate cut of 50 basis points, and it peaked up at about 4.5%. And if the bond market continues to have a problem with this as we go through the year, that's when the S&P is going to have an issue. So I'm watching yields on 10-year treasuries very, very closely, because that'll probably give you the first hint that, my stance of, don't worry, be bullish, you're going to have to start changing, and you have to adjust with the data as you go.
Yeah, absolutely. Dan, I really appreciate having you on today. You're a legend, and I hope you can accept that as a compliment that you've earned. We talked about 2000. Only a few people came out of there unscathed, and you were one of them.
I appreciate it, Charles.
See you soon,
Thank you.
man. Thanks.